So thanks for joining. We are presenting here on Zoom, and then we're also broadcasting live on OHA's Facebook page. So if you have any questions throughout the presentation, please just utilize on here the chat function to ask a question, or on Facebook, just add a comment, and we will be watching those as the presentation goes through and bringing questions back to my team and Yolanda as we get moving forward. One more time, introducing Yolanda Butler. She's with Operation Hope. She is up to date on what's going on at Spencer Homes. She's aware of our relocation process and where we're at in the stage of that. So we have asked her to come and present specifically to you, residents of Spencer Homes, regarding information related to credit and money management dashboard support that you need right now or in your future. So I want to go ahead and introduce Yolanda.
Thank you, Karen, and thank you for the team members and the Omaha Housing Authority for having me here. And I'd like to just say that I'm delighted to be here today, and hopefully something will be said that will turn a light bulb on for you or will trigger questions that will make you take the next step of either reaching out to the Omaha Housing Authority or reaching back to me. So I want to first share with you about Operation Hope, and then I'm going to do this presentation a little unconventional because time is of essence with some of the things that are currently going on in our country, and I want you to be up to date on that to see if it's something that you can take advantage of. So Operation Hope, who are we? We are a 28-year-old nonprofit, and we've been around. We started in Southern California. The owner and founder is named John Hope Bryant, and he started this after the Rodney King incident of what happened to Rodney King. He was a young adult at the time. He's in his 50s now. But when they had the pronouncement of the verdict regarding what happened to Rodney King, there was a very large protest that turned into one of the biggest riots in our country. And Mr. Bryant, being a young adult at that time, he asked two questions to himself. He said, first, if we owned more of the homes in these areas, will we be burning them down? The second question he asked himself, if we owned more of the businesses, will we be burning them down? And as a result, there birthed Operation Hope. If you look at this map, you'll see that there's stars. Now imagine this, over 28 years ago, he started this because something happened and he had a solution. And it started in Southern California. But as you can see with the stars, we've moved in so many states. And just because you see the star, there are even more offices within the state. So why am I saying that? If you choose to work with Operation Hope, and our services are no cost, wherever you travel in the state and there's an Operation Hope, you have access to the services of Operation Hope. Here's Mr. Bryant. And you can find him on Facebook. He does Facebook Lives. If you're on LinkedIn, you can find him on LinkedIn. He's very accessible when he's on Facebook. He loves to talk to people. He's a very unusual CEO and founder of an organization, and I love to be a part of it. Now, what I want to do, as I stated before, I want to take an unconventional approach to this. Normally, we would be covering our workshop topics, but I'm going to go to the end of this presentation for where I want to start. Right now, even tonight, President Biden is going to be giving, they don't want to call it the State of the Union. He's supposed to be speaking to Congress, but he's actually going to be talking about some of the plans that he has laid out for people in our country. And some of the things that I'm going to be talking about are actually some of the things that are going to be infused in what's coming ahead. I am actually excited about it. So I would first like to start with the program called EITC, and it's the Earned Income Tax Credit. A lot of the things that I'm going to be talking about today center around your taxes. I don't expect you to know how to do taxes, but I want you to consider, am I leaving money on the table? Am I leaving money on the table? So the Earned Income Tax Credit, it's pretty much based on giving you credit back based on the earned income that you earned and based on how many children you have in your family. I'll get to the fact if you don't have any children. So here's the EITC. Again, to qualify, you do have to have earned income and you do have to file your taxes. If you haven't filed taxes, that's okay. You can work with a tax professional to do that. But I just kind of want to, let's look at this slide right here where you can see based on one child, and if the income was less than $41,756, there is an earned income tax credit of up to $3,500. That's $3,584. Now, if there was a joint married couple and their joint income was below $4,646, they also could get up to $35,000 for their earned income tax credit. And as you look at this, we can see if there are 2 or more children and you fall within the guidelines, then the earned income tax credit, as we can see, moves up to $5,920. If it's 3 or more children and the income falls within the guidelines of roughly a little over $50,000, but under 51, and then jointly a little over 56,000, but under 57, we're talking about $6,660. And, you know, I want to ask the question, could that make a difference in your life? Could $6,000 put into your pocket be something that could be beneficial and be life-changing for you? Well, guess what? You want to make sure you're not leaving anything on the table. Now, guess what? This is just for 1 year. There is actually a 3-year look back. So if you are not aware of this, or maybe if you even did it, you would need to be connected to a professional tax person. And we do have people that we can refer you to. However, once the forms are filed, you could get a 3-year look back. And I kind of formulated what that looks like. So for instance, if you had 1 child and you qualified for the earned income tax credit, a 3-year look back could yield you $1,586. A 3-year look back for 1 child could actually yield you a little over $12,000. And then a look back for 2 children could yield you a little over $17,000. And then a 3-year look back for 3 children or more, it's literally almost $20,000. It's $19,648. My question to you, would any of those amounts make a difference in your life, in your family, in things that you might be able to do, or the goals you might be able to achieve, or the savings of which you might be able to have because of this? Now, one of the things that they also allow in the earned income tax credit is maybe you don't have earned income in that manner. Maybe your income comes from investments, which is still considered income. Then they have limits on that, and it's much lower. It's $3,600. But again, earned income tax credit, do you know about it? Are you making use of it? If not, we would love to be able to sit with you and share with you how this can work. Now, what are the eligibilities for being able to qualify? One, as I said before, you need to be having earned income. But who qualifies in terms of the age limits for this? So we are actually looking at anyone that's 18 or under in your household that is a dependent that you claim on your tax credit. If your household is such where you're separated or you're single, normally if you're single, you're probably claiming. But wherever those children live 5 months or more, and that person is actually taking on the ownership of taking care of them financially, then that would qualify you for the earned income tax credit. Before I go on to the next one, I just want to find out if there are any questions. I think it would be easier if we just did questions after each segment that I presented, so that way I don't have to go back and confuse people. Are there any questions around the earned income tax credit?
No questions via Facebook so far.
Okay, so let me say this before I move on to the next one. The earned income tax credit that I talked about was federal. It gets even better. You can get an earned income tax credit from the state of Nebraska. The state of Nebraska has earned income tax credit. Not all states have that. So again, it won't be the same amount as the federal, but it will be a percentage of whatever you qualify for under the federal earned income tax credit. Okay, so the next one that I want to move on to where people are leaving money on the table is the child tax credit. So if you have children, there is a tax credit for having children. Now let me talk about the eligibility of who qualifies as a child. Again, anyone that's 6 to 18 years of age in your household would be qualified for that. Anyone under 6 years old would be able to qualify to fit under the child tax credit. But here's the one that people probably are missing out on. If you have anybody in your household that's 24 years or younger, and you are primarily taking responsibility for them, and they're in college, they're college students. And when they say qualify as a college student, you have to be full-time, and it has to be a program that is considered a full-time college program. And you can now put them into the number of qualifying for that child tax credit. Now, what's really nice about this one is they've made some adjustments. So for 2021, there's a $3,000 child tax credit for each child. For 2020, there's a $2,000 tax credit for each child. And you know what's really nice about this one, the credit will actually reduce the amount of taxes you owe. But I want to talk about something that's there, and it's called additional child tax credit. Remember, the credit will reduce the amount of taxes you owe. But let's say, just for example, that I end up owing back in my taxes $1,000 on, and I need to pay it back. For 2020, and I get a $2,000 tax credit, child tax credit for having one child, when I fulfill that $1,000 that I owe, there's $1,000 left. And so what the additional child tax credit does, it allows for that to be filed, and that $1,000 that's sitting in that credit can come back to me in cash. Again, that's really, really nice. And for 2021, they've increased the amount to $3,000, and that's a child. So are you leaving that on the table? Are there any questions about the child tax credit? Yeah, I see a hand.
Yes, so my question was, when we're filing our taxes, is this something extra that we need to do other than just claiming our dependent on our taxes? Is this another like form that we have to fill out, or should it all just kind of populate itself? Like I use TurboTax to file my taxes.
Yeah, I don't file taxes. I do have a tax service that I do refer to. I know that it won't populate unless you know what to put in. So if you are knowledgeable about these things, you could actually on your own, I'm about empowerment, you can Google and see and walk yourself through. However, since this is money that's being left on the table, I would recommend that you find a trusted source that is a tax preparer to sit down with them, because although I'm giving today some of these areas, there may be even more. It's like couponing. once these start adding up, oh my gosh. And then there's a 3-year look back if you haven't even been doing it. So I'm just saying, like, who would not go back and see if there's money that they've left on the table? And again, to make the pie sweeter, the state of Nebraska has child tax credit for the state. So not only is there the federal, there's the state. EITC for the federal, EITC for the state. That's 4 pots for you to look in right now. Who would not do that? Okay. I hope that answered your question. Are there any other questions from this topic that I covered?
Yolanda, we just had one more general question asking about, it looks like on Facebook we have a Benson Tower resident who's participating.
Yes.
If they're eligible for services. And I wrote a message back saying that they are free and available to everyone in the community. And if they want to share their contact information, we'll get you connected. That's correct, right?
Yes, yes, yes. Now, I have something else exciting before I go on, because I kind of get excited. I love helping people. It's what I do. Now, let's say that last year, which would have been 2020, you were impacted in your job by COVID. So you didn't earn as much money in 2020 that you did in 2019. Well, guess what? There's an exception going on for this year with taxes. So remember, these are kind of based on your earned income and what you can get. So I want to give you a real life example that I got from the tax preparer before I came on, because I want to keep it relevant. There was someone that they were working with, and they did their job was impacted in 2019, and based on that, they were only going to get back $1,900 based on their earnings in 2020 because they lost income due to COVID. But the exception rule says you can go and do a look back to your 2019. So if your earned income in 2019 was more, they will allow you to use that for 2020. And so this potential $1,900 credit turned into $7,000 just from being able. So again, knowledge is key. Knowledge is empowerment. When you know more, you can do better. You don't know what you don't know. So I'm here to shed light. Don't leave money on the table. So there's an exception for your taxes this year where they will let you go back to your 2019 to be able to pull that number in if that's going to make you qualify for more. So any questions on that? Okay, the next bucket of money, I want to talk to people with EITC who don't have any children, because I did state earlier that it was based on having children. However, if you don't have any children, you can also too apply for EITC. And here are some of the eligibilities. You have to have your main home in the USA. You can't be being qualified as a dependent on someone else's taxes. So that's like double dipping because someone is saying that they're taking care of you. And you need to be between the ages of 25 and 64 years old in the tax year that you're applying for by December 31st. So there is the opportunity for those of you who don't have any children to qualify for the earned income tax credit. Now, you're not eligible if you're married and you're filing separately. You're not eligible if your income that you earned was from a foreign country. You're not eligible to be able to do that. And then there's another one that makes you ineligible based on your spouse or yourself not being a US citizen. But again, it's well worth checking into. Now, the next bucket I want to go into are stimulus payments. There were 3 stimulus payments. Did you get the stimulus payments? And those were based on if you made less than $75,000 as a person, you qualified. If jointly as a couple, you made less than $150,000, you qualified. And then based on if your income was a little bit higher in some areas for that $75,000, you got a percentage. If you did not get, I don't think you can go back and claim stimulus 1, but you can go to the IRS, their website, and Google in Get My Payment. You can put your information in and you can find out where it is. And maybe you have an older person in your home who may need help with that. You can go to Get My Payment and find out where your stimulus is. Now, there is a deadline. May 17th is the cutoff deadline to be able to get your stimulus. If you don't get it by then, you're not going to be able to get it. Okay? But again, why are we leaving money on the table? Now, the $1,400 I just talked about for adults. But if you have children, they're giving money for that too. So there's $1,400 a child. Why are we leaving money on the table? My stimulus payment. Make sure you have that. Are there any questions about the stimulus?
I'm not seeing any on Facebook.
Okay, the other thing I want to say is if you, and I'm talking about the stimulus right now, if in fact you didn't file taxes, or I should say the way you file taxes would be the way that they give it to you. So you might get it put into your bank account. But I have worked with clients where they closed out the bank account and the bank sent the stimulus back. And now they're searching for their stimulus. Sometimes they send it in the form of a debit card. So be careful of looking at something that might look like junk mail, because I know somebody that threw it out. Luckily, they were able to go to the garbage and retrieve it and get it back. It had $2,800 of stimulus on there. So I just kind of wanted to put that out there for people to know. Okay, the next bucket that I want to move towards are deductions. Remember, we talked about tax credits reducing the amount of taxes you owe. When we're talking about deductions, this is coming off your earned income so that when you have to pay tax, you're paying less. Again, deductions. It's coming off my earned income, which will reduce my tax debt. And there are deductions out there. The first one that I want to start with is childcare. And, you know, are you paying childcare? And to be eligible, it needs to be somebody 13 years or younger, or you have an adult. It could be your spouse. It could be your mother or father who are living with you, or a relative who is under your care that has disability that can't care for themselves. So again, there are deductions for that. And based upon how you pay, now if you're paying straight out your pocket, then that's one way. Some employers have where you pay and then they reimburse you. So you would need to sit with your tax preparer to see how that works for you. But just to know that there is a deduction for childcare, 13 years or younger, or a spouse, or a family member who is solely dependent upon you, and you have to pay money in order to go to work. Now, here's where I want to talk to people who are on unemployment, because in this loophole, they say, if you're looking for work, if you're looking for work. So did you know that if you were on unemployment and you were looking for work and you had to pay childcare, here's a deduction that you can use. Again, this is going to reduce your tax and then leave you with the amount of what you would need to pay. Any questions on that one? Then the next deduction that is out there is around your work expenses. So depending upon what type of work that you do, you are allowed to deduct 35% of that on your taxes. And again, that's reducing your taxes. On this one, I would really recommend that you get with a tax preparer or somebody that knows what they're doing, so that you make sure that you are taking out the things that you actually can take out, and you're not doing it where they'll come back and audit you. So I just kind of wanted you to be aware. And for those people who may be self-employed, there are provisions for you in terms of being able to take these deductions. Any questions around that one? We've already covered like 7 buckets. You know, and it could be amazing. And then add to that times 3, you can get a 3-year look back. I'm just saying. Now, this one is not related to taxes, but this is one where people sometimes can leave money on the table, and that's around your Social Security. So they take your 35 highest years and they base your Social Security. However, if you have, if you are married or you are in a same, sex partner relationship, you can qualify for the other person's Social Security. You can't get all of it, but there's some out there that you might be able to get. And I would recommend, to find out exactly what you qualify for, is connecting with your local Social Security office. So again, that's money that's being left on the table if you are of that age in terms of Social Security and qualifying. Any questions around that? So I hope this section around, not leaving money on the table was very helpful to you. I'm going to move into some other areas. This one here is VITA. So, sometimes people don't have the funds to get their taxes done. And so throughout the country, the IRS has VITA sites. And these are volunteer income tax assistance places where you can go and get your taxes done for free. Now, it's not putting any money in your pocket, but you're not spending any money. So it actually becomes a savings for you. So when I'm not spending money, that's something that's, still not coming out my pocket. Again, you can Google. I think the last one that I saw was in Council Bluffs, and they were doing it by appointment only. But again, if you are in a position where you need to have your taxes done and you can't afford to pay for it, or you choose not to pay for it, you can use VITA. And I want to say this, since I'm on the IRS, there has been an extension of the date that you have to pay taxes. It was the 15th and they've moved them back. And based on your state, Google your state to find out what the state has said, because those 2 dates don't mix. And if you can't meet your tax deadline, file an extension. Just file an extension and it will buy you some time so that you don't incur any additional fees on top of what you owe for not filing. Any questions around that? Well, I go here before I go back up. So Operation Hope, I didn't really kind of get into all the things that we do, but since I'm on this slide, I talked about how Operation Hope started behind the Rodney King incident. But on 9/11, there was an incident that occurred in New York. And the one thing that I love about Mr. Bryan is that he's so in tune to what goes on in the country, and he responds with his company accordingly. So when 9/11 happened, he was like, how can Operation Hope offer services that can be beneficial to people in the communities from where we live, or even where we don't live, where they don't live? Their birth for inside of Operation Hope are disaster relief. And we've been able to do a lot of work in disaster relief, responding to the hurricanes, the floods, the most recent, what happened in Texas with the electricity, the fires in California. Now, how do we work within this? We're like a middle person bridge. But if you experience any impact from COVID-19, from any of the other things that I said, you could reach out to us through Operation Hope, and we could help bridge you to services. Let me just share with you some of the services that I'm currently bridging people to through Omaha, Nebraska. There are services for rent relief. If you were impacted by COVID and you can show that you were impacted by COVID, there's rent relief. That can go back as far as a year. Why are you leaving money on the table? There's help where there were federal funds that came from the government, that went through the state, that came to the county, that came to the city. There is relief in utilities. If you were impacted by that, that can also be backdated. So these are some of the things that we do in our recovery services. We connect people with FEMA because FEMA has funds to help people. Sometimes if a person was a small business owner, or if there were a homeowner, or even if you rented an apartment and because of the disaster of, uncontrollable to you, there are support services financially to be able to help you to go through, file the paperwork, do all the necessary things. We have disaster relief. This is just a kit that we give out. Nobody plans for disaster, nobody plans for emergency, but my challenge to you would be, do you know what you would do if there was a fire in your home? Do you know what you would do if, something unexpected, a flood came? This is just a free booklet that I can send out to you if you choose to put your financial disaster plan on paper. And again, here is the number that you can call, or you can just go to our website, www.operationhope.org, or you can contact me. I prefer you contact me. This just talks a little bit about our model. And so at this time, I talked about disaster, and you can see to the right that we have a whole disaster division. We have offices, and sometimes we're in the workplace. So I can tell you that our biggest national partner is that we just got Delta. So we service Delta, we service FedEx, we service the police department in Atlanta. There are employers where Operation Hope has an office just for that employer. And that's considered inside the workplace. But we also have a Hope Inside. So for instance, myself, my office is located inside of Heartland Workforce Solutions, which is the American Job Center. So you can reach me through phone or Zoom now because we're still on COVID, but that's where our actual office is located. And that would be considered, which is to the far left, a Hope Inside. And then lastly, we have a whole division that services young people. And in the youth division, we share with them about the concept of money, savings, and then also entrepreneurships. And we have youth all over the country that have their own businesses, not to have a business for life, but we believe that the concept of entrepreneurship teaches a lot of skill sets that can be helpful. This slide just talks about knowing your rights, the same way that I was empowering you about not leaving money on the table. When you start dealing with your credit, and I really, for me, it didn't become real until I worked for Operation Hope. I was a situational credit person. I've been with Hope for 8 years, but you can't work for a company that does credit and not look at your own credit. You just can't do it. It's hypocritical. So I came into Hope under small business, and I ran their small business division. But I had my own aha moment a year after I worked for Hope that, hey, Yolanda, how about you get your own house in order? How about you get your family's house in order? And I took it on myself to work on my credit. But I'm saying all this for you to know that you have rights. And I want to give you an example. If you ever have a collection that comes to you in the mail, you need to respond within 30 days. That's the most critical time to respond to a collection, is in the first 30 days. I want to give you an example of what happened to one of my millennials that I'm working with. They got a great opportunity, probably one of the biggest promotions of their life. They were going to need to be relocating, and I pulled their credit. Their credit was almost close to 700, so I wasn't worried about them. But guess what? When I pulled that credit before they moved, and I'm talking about this month, there was a collection that got put on that account, and that score dropped significantly. Now they're relocating. They're going to need their credit to qualify, and now you have a collection on. So I have a letter that I can work with you with that will challenge them based on your rights. Once you send that letter to them, and we did, and he sent it certified, and right here, because I kept a copy of it, they were able, and I'll just read what they said to them. It says, we have conducted an investigation of your dispute and notified of your dispute. We have ceased collection of your account and requested the removal of our trade mine from all the credit bureaus. This was in less than 11 days from them to be able to get that. So knowing your rights with your credit, and these are some areas where you have rights. How long does negative things stay on your credit report? 7 years. Collection and charge-offs stay on for 7. Civil judgments, city, county, and state and federal tax liens stay on for 7. And then there's just a whole division of bankruptcy. And these are things that can impair your credit score. You know, we don't want these things to happen, but life happens. So this is why we work really hard to make sure that people are empowered so they understand. Now, the one thing that's not on here, and it doesn't go away, but you're able to get help on that, are student loans. They don't really care if you have bankruptcies or things like that. The student loans are a whole nother monster. And if you're listening and you're out there with student loan debt, we can actually help you. I want to key in on this, and then I'm moving up to the top, is not always that you pay your debt is equal. So there's debit cards, there's prepaid cards, and there's credit cards. I'll start with the credit cards. The credit card is just a short-term loan. That really is what a credit card is. They check your credit, they give you an amount, and you're able to use that limit, and you're responsible for paying it off or paying on it. And based on how you do that, it can impact your utilization, which is a large percentage of your credit score. A prepaid card, I'm using my money and I'm taking it and I'm putting it on a card and I'm paying. Now, that could be wonderful. The only thing about that is you have to be careful of who you're buying it from. I had a client, an older lady, she did a prepaid card. She thought, and she put $1,000 on there, and she thought she was using it to pay her utilities and pay. Guess what? They were every month, without her knowing, taking a little bit off and a little bit off at a time. When she went to go and pay her utilities, that prepaid card had nothing on it. Okay, so it is a good form of not having cash, but you want to be clear. And then the debit card. If I have a bank account, it's normally attached to that. It can act like a credit card depending upon when I'm using it. However, with this form of payment, I need to be a really good manager of my bank account. Because if I'm using my debit card and I tell the college students that I work with all the time, why are you paying $13 for in and out and you're paying $35 because you didn't balance your credit? I mean, you didn't balance your checking account. So now you're paying fees to use your debit, but these are ways for you to pay your bills. And this is where I want to end, is what makes up your credit score. And this is really important. So the credit score is a 3-digit number. It comes to us through the credit bureaus, TransUnion, Equifax, and Experian. But this information is fed into them and they get paid to disseminate. So of that 3-digit score, 35% is how I pay my bills. Do I pay on time? Do I miss payments, or I don't pay at all? 30% is my total debt to utilization. And that goes back to that credit card. If I have a limit of $100, how much am I utilizing and how much am I leaving free? The more that I leave free, the better my credit score could be. The more that I'm utilizing, leaving on my credit report, it could bring down my score. And then 15% is your credit history. What is your credit history? Well, it makes up whenever you started credit, but it also encompasses as you continue to build new credit. So it's not just how long you've had credit, but it averages out when you take out new credit. And this would be my recommendation. Don't close old credit cards, because as you close them out, you're closing out the length of your credit history, which can impact overall your score. 15% is a lot. Now, I understand that life happens and things happen. If you would have to close out something, only do one a year. Only do one a year, because your score will take a dip, but try to leave the oldest one on. Account diversity. Here they want to see, am I able to manage different types of credit? A revolving card, which would be, a Macy's, a Kohl's, a Dillard's. Installment debt, which could be a car, furniture. Now, I want to share with everyone that's listening, there is a form of installment that you can put on your credit report that will give you that mix if you have revolving, and it won't require a hard hit on your credit report. This is amazing. It's called SELF, S-E-L-F, S-E-L-F. You Google it and you look it up. But the product that I like that they have, it is a savings account that reports as an installment loan. It is a savings account that reports as an installment loan. So if you're looking to build up your credit because you don't have much credit, or you're looking to reestablish your credit because of past mistakes, this could be a great tool to couple with a revolving account on your credit, and you can build your credit. I've had clients that went from 500 to almost 700 just from doing the self account with a revolving. So that's something. And then lastly is new credit. Here's where we hear about hard inquiries or soft inquiries. Whenever I'm applying for credit and I'm reaching out to a creditor, they're going to pull my credit. That's considered a hard inquiry. You get 4 a year. But guess what? You don't want to use 4. And then let's say, let me use an example. I'm looking for a car. They will group within a certain time period my look with certain lenders as one inquiry. However, my caution is if you're looking for a car, pull your own credit, pull it up, and show it to them so that they're not pulling, because they'll pull your credit 5 or 6 times. So new credit. And that makes up your credit score. So, I want to thank everybody. It's 1:52. If there are any questions for me, and I'm going to leave my contact information up here.
We've posted your contact information in the chat here as well as in the comments on our Facebook page.
Okay.
Yolanda, this has been so much helpful information. It's almost overwhelming. Can you talk briefly about if someone connects with you, what does that initial meeting look like and what can they expect moving forward?
Okay, wonderful. So it won't be this overwhelming. We're going to, and we can meet by, right now I'm not doing in person. I'm going to get my first vaccination shot on tomorrow. So until I'm fully vaccinated, I'm not doing in person. And our whole company has us at home. But this is what you can look for. We can do it on Zoom. We can do, we can FaceTime. We can Google Chat. But what would happen, our initial would be an assessment of what your goals are. I'm not going to come at you with all this information. I want to know what it is that your goals are and what you're trying to do. So we would sit out and look at a work plan. We would give you a complimentary credit report. When we pull your credit report, it's considered soft pull because we really do want to look to see where you are and then make some assessments from there. The way our services work, again, they're no cost. We like to meet with clients once a month. So again, we just kind of have a check-in to see where things are going. If anything comes up in between that 1 month, you always have access. You can just reach out and say, hey, this is going on. I just had a client like that where some things were going on and I met with her for 4 weeks in a row until we were able to resolve what was going on. So that's what it would look like.
Great. And then, like I mentioned in the beginning, Yolanda is aware of our relocation process. So if anyone is concerned about something that's on their credit that may come up as they're applying for a Section 8 housing, or if they're looking to relocate to a different relocation option like Highlander, and they're worried about debt that you might be carrying on your utilities, Yolanda would be a wonderful resource to kind of talk through what to do, starting point, how to have conversations with landlords or companies to kind of navigate some of those concerns that you might be having. And I think lastly, Yolanda's not going anywhere. She is one of our dedicated partners as part of the Choice Neighborhoods Implementation Grant. So she will be working with us very closely. She is connected to our case management team. We will likely have more information sharing sessions like this in the future to just kind of touch on certain areas. If this doesn't feel like an appropriate option for you right now, but down the line you want to learn more and make a connection, you can always reach out to case managers and they can get you connected to Yolanda. The last thing I wanted to note is if technology, since she is just meeting virtually, as a lot of the world is continuing to do right now to be safe, if you need help getting a virtual appointment or having access to technology, please let us know, because we want to eliminate any of those barriers to accessing any services that are available for you in the community. We can set you up in the Learning Center, or we can set you up with the case manager to help you get connected to Yolanda to have an initial appointment and ongoing appointments as well. Thank you so much, Yolanda, for being here. I'm not seeing any additional questions that have come through. We provided Yolanda's contact information so you can reach out to her directly, and she'll be tracking where you came from. So if you're a Spencer resident, she'll just let us know that you're working with her, or if you want to get some more information from your case managers and they can help you with getting connected, then reach out to them and they will make sure that you and Yolanda are paired up. So if I don't see any additional questions coming through, I just want to thank everyone so much for your time. Yolanda, thank you so much for your time and this wonderful information. And I'm going to go ahead and end the meeting now. So thanks so much, everyone. Have a good rest of your day, and let us know how we can help as we move forward.
Thank you.
Yeah.
Bye.
Bye.